Hello, welcome to June. Welcome to the start of summer. I wanted to go through some of the things that we've seen not only in the month of May, quick little review of quarter one, some things we're seeing here in quarter two, and some recent updates that we made to portfolios as well. So May, pretty good month for the market. S&P 500 was up a little over 6%. Led by tech. So, of course, tech continues to be in the spotlight as one of the major kind of players or drivers of the market. Sector by sector, healthcare was the worst as far as the month goes. All in all, so far this year, the market, S&P 500, is up just over a little bit over 1% when we're looking at the end of May. So not a lot of stock market gains, for us so far this year. Bonds were down slightly in May. Yields continue to kind of bounce around a little bit. So as we know, as yields go up, bond prices go down, and vice versa. However, so far this year, bonds have kind of been leading the way versus stocks, up about 2.5% year to date. So definitely some good gains there, and some drivers of return inside of retirement income portfolios. So in quarter two, economically, we have seen that surprisingly, or maybe not surprisingly, that the trade deficit has declined. And the Fed, at least the Fed of Atlanta, is signaling some higher growth forecast for the second quarter. Inflation's also declined a bit, getting closer to that long-term target of what the Fed is looking for at 2%. May clocked in at about 2.1%. But of course, some of these things do look to be a little bit temporary. What do I mean by that? We did see that, a lot of goods were pulled ahead in quarter one with the expectation of the tariffs coming down the pipeline, of course. And now obviously we're seeing that, the trade deficit declining as some of those goods, have pulled back a bit. Some of those imports have pulled back. So you flood the market with a lot of imports, and then obviously there's going to be a bit of a wait and see period. Obviously we're still looking at what the results of tariffs, might look like. And on that front, obviously still every day looks like some new news on the tariff outlook. A lot of them being walked back, of course, and not a surprise. We kind of saw from the very beginning that tariffs seemed to be more of a negotiating tool, and we're expected to kind of bounce around and go back and forth, and used as a way to kind of get some of these deals that the administration is looking like. So now that some of those have been walked back, we're seeing that the risks of a recession seem to be declining a bit. That doesn't mean to say that we're out of the woods. The economy still looks like it's slowing down, and the equity market, stock market, is still a bit overvalued. So as we know, tariffs do not lead to economic growth. Neither does isolationism. So at the end of the day, hopefully all of us worldwide can play nice in the sandbox. That'll take some time, of course, but obviously global trade is certainly a driver of growth, not only here, but abroad as well. So despite, everything that we've been seeing on the economic and especially political front from the media, not all doom and gloom. Market has not crashed, if you will. We've obviously seen volatility. Seems fast and furious here, and a little bit behind us from April. But obviously the news is still out there, and we're not done with everything yet. So, but again, not the end of the world either. We continue to make changes that we believe are appropriate inside of portfolios. And what does that mean? We did reduce some of our S&P 500 allocation inside of portfolios portfolios here recently. Again, we're just concerned that the market being overvalued means that we should, take a step back, reallocate into some other areas. So where did we go with those monies? We went into more global equities, so stepping outside of the United States a bit, because there certainly is opportunity there, and it looks like less overvalued situations and more opportunities. And we continue to add some additional funds into bonds as well. So that's it for now. Hope you enjoy your June. We'll see you in another month. If you need anything, please don't hesitate to reach out. Thank you very much. Take care.